Good afternoon, everybody. It is 1:01 p.m. on this Monday, the 22nd of October. Welcome to Decryptomarkets. What an exciting, well, really non-exciting time of the week. Not a lot of movement going on at all. Just really tight consolidation. And just kind of looking at really a pretty dull mover, clearly sitting in one spot. Going to kind of go ahead and get started right off. So looking at this chart, this is Bitcoin's chart. All right, and the candlesticks may be colored a little differently and weirdly because these are swing relation candlesticks. All that means is that depending on how the candlestick traded, it changes color. So if there was a candlestick that had a higher high than the prior candlestick, if it traded higher, then it will be colored green. Doesn't matter if it actually created a bearish or a bullish candlestick, it'll just be colored green. If it had a lower low than the prior, then it'll be colored red. If it engulfed that move, if it had a higher high and a lower low, it's colored blue. That's called an outside bar. And then if it's an inside bar, which means a lower high and a higher low, then it's colored black. So outside bars and inside bars are often used as indications of reversals. Inside bars, there's a lot of great trading strategies off of inside bars that you can use. Anyways, looking at this chart here, this is 2011. We've gone over this before, but this is for folks who don't know about it. So 2011, we fast forward in time, we see this pattern show up quite a bit. Here we have 2012, a little bit messier, but still the same thing. Then we have 2013. We have 2014. This is the Mt. Gox debacle. Now, 2014, very interesting. Huge drop down, followed by the longest period of consolidation that we had prior to the next larger breakout zone, which was probably over here in late 2015. And then we just had an expansive market that went on for quite a while. So that was back in 2015, 2016, that pattern. And ultimately we get all the way over to 2017 and we see this pattern here. This is where we're at. We see pretty much the same pattern here played out few months later in February and March. And then again, to a lesser degree here, and that's the last time it happened. So we continue to see these kinds of moves happen and form. What I want to point out is Gann squares and how relevant they are to any market. And the danger of showing you this is that, well, it looks like you can do this and, oh, look, it matches up with past price action perfectly. Well, we can compare it to previous highs too. So Gann always talked about squaring a range or squaring a low to the high or the high to the low. There's a various way to square his charts, and it's done very easily with this software. This is a market analyst. But if we want to square the range of like a low to, so here's the lowest price for Bitcoin. This is back in 2010 and going all the way to the high right here. There is our Gann square of a range. But the hard part is that, you know, this is kind of a tight little kind of a trading range. It gets a little difficult to read and trade in it just because of how it's designed. You can trade in it just fine. It's just not the best kind of a square. So squaring the ultimate low to the high here, because it has had such an expansive move, is very, very odd looking. So the next best thing that we can do is square a market and maintain the angle that was generated on that move. Square the angle. And when this happens, we have to lock the scale because otherwise it'll automatically adjust. All right, and then here's the angled Gann square. So if we were to go back in time again, it's very difficult to see how it worked in the past because of the degree of the of the distribution that we've had over time. So Bitcoin is a funky chart, and it's an odd one to try and square off of because the distance it has moved in price over the very short time that it's existed is ridiculous. The fact that something started off trading at had a low of something of a couple cents and is now has traded all the way up to like 20,000. It creates a very odd geometric Gann square, and sometimes very difficult to do. So the next best thing this is really where traders have to kind of use their own judgment, is finding a swing from another relevant or important low. And the one I always like to use for current is the kind of the first where's that? Right here. Yeah, this is in January 2017. This was the first kind of major swing low that we got off of an expansive move. So that's the kind of low I actually use a couple of them, that one or this one. But basing it off of this low is perfectly appropriate, where we could square the range. Sorry, didn't want to do that. Just want to do the squares. Where are you at? Gann squares. There we go. Ugh, why is it doing that? I will get this. It's a Monday. By the way, I hope you all had a good weekend. Mine was fun. It was my birthday. The 20th was. I got really drunk. Where are we at? No. What am I selecting the wrong one? I want the square of the range. That's aggravating. Why is it doing that? Oh, I know why. Because I have to adjust the factor. My bad. We did by 4. Yeah. All right. Well, thank you, Peter. Pietor. Regardless, squaring Bitcoin's chart is kind of sometimes more of an art than a science. I mean, we can swing from the ultimate low if we want to, but I mean, we could. But then find a alternative former swing high. So, when this was the high, the Mt. Gox era, then we should probably look at, well, what happened when the swing high was all the way over here back in September of 2017, or maybe November 8th of 2017. How about that? We could try that one. Yeah, just not as... Wonder why this is doing this. Because it doesn't look like this on my others. Oh, sometimes the software is a little funky. Regardless, go back. Want to take a real quick look at our square of 9 value areas and the planetary angles. So taking a look at Bitcoin, again, these wavy lines might give you a little bit of a headache, but the wavy lines represent planetary line. And in this case, this is the Jupiter. For whatever reason, Jupiter and its harmonics. So that's like the division of lines between the actual position and when it comes back. So Jupiter's is it's way down here again. It's off the screen, but for whatever reason, Jupiter seems to act as a pretty strong area of natural support and resistance. Okay, and this is astronomy. This is not astrology. Okay, this is astronomy. I talked about this in Forex Lens this morning, that astronomy is a science. Okay, so NASA does astronomy. So NASA does science. Astrology is what Madame Cleo does. Okay, or your fortune tellers. Okay, astronomy is a science. It is something that cannot be changed. And I was rereading, prepping for this week's stuff I want to talk about. I was rereading Constance Brown's book on Fibonacci analysis, which is one of the best books ever on that. You know what? I could just pull it up. And let's see, Cloud Reader. Give me 1 second. Sign in. Okay. This is the book from Bloomberg Market Essentials. Okay. Constance Brown is a CMT. She's a certified market technician. She's also an educator. Some of her books are required reading for the CMT, for the CMT license. She is a frequent professional analyst. Her ability to forecast prices and price ranges is pretty awesome. She's a very she's crazy awesome. I mean, I'm a big fan of her work. She's also a big Gannist, and what's nice about Constance Brown is that she's not only super intelligent and extremely well respected, but because of that, she can talk about financial astrology and financial astronomy. She brings those things up. She's not afraid to bring them up, which is great because it's nice to have somebody who is highly regarded in the field of technical analysis and does not shy away from talking about it, even though she expresses that people often disregard financial astrology and astronomy as voodoo doll stuff, which is also ironic because up until 20 years ago, people thought technical analysis was just voodoo stuff, and we know it's not. But in her work, this book is very, very advanced stuff. It flows about as well as you could have a book flow for this kind of material. But when she talks about Fibonacci applications for time analysis, when she's talking about Fibonacci time zones, you've probably seen those before. One thing that she's pretty good about pointing out, and by the way, I have the physical book and the digital. Get the physical book because she uses a lot of charts, and trying to use the charts on depending on what you're reading on and depending on the scale of your screen, the charts get inverted. It's so. I think a lot of books on technical analysis with charts are much easier to read when you have them physically than it is over digital. So just a thing to note about that. But when she's talking about, she's relating a lot of Gann's work and Fibonacci's and how they work together. But when she's talking about time cycles in Fibonacci's, she and if I may be way wrong on this, and on the off chance she ever watches this video, Fibonacci cycles based on time are very, very inaccurate past like 144, the 144 period or even farther. I mean, they're just not very good at doing a time cycle. So we have to rely on something that's fixed, and that's what Gann was big on, was those fixed time cycles, fixed ways to measure movements. And one of the best ways to find a fixed time cycle is to use something that is part of nature or natural. Like man can't adjust it. Like holidays are time periods that man can adjust, or even the weeks. There's different calendars that different people use. There's a Jewish calendar, there's a Roman calendar, there's a Chinese calendar. Time and months and days of the week, all of those are pretty relative depending on what your perspective is. But there are some things that man can't change, like the rotation, how many hours it takes to go around the earth, or the sun around the earth. Wow, who believes that? When we orbit around the sun, how many hours does that take, or how long does it take for Pluto to rotate to make a full 360 in our solar system? It's some of those things are just fixed. It doesn't matter what day of the week or what calendar you use here on Earth. Things happen and form natural cycles regardless. They're just things that, natural cycles are cycles that man cannot change. Okay, so that's, I think, the key to finding a lot of swings in markets. And if you've been in this before with me, you've seen this before, but this is for the benefit of those who haven't. Finding particular time cycles is going to vary on the market you trade and the instrument you trade. And the one that I found that works for Bitcoin, crazy, and this was only by accident. I was reviewing some of my notes. I was trying to consolidate all of my notes, something I do like once every 2 years. I try to consolidate all my notes and throw away things that I've written down repetitively or read down. And I was rereading one of Larry Pesavento's books on astronomy, and he pointed out something in the gold chart, I think, a particular angle, a single angle of Venus relative to Earth. So again, this is not an astrological thing. This is an astronomical. So this is a science. We're finding the angle of a planet from here on Earth. So he had mentioned 36 degrees of Venus, and I thought, well, that Venus is an important planet in any type of financial analysis involving a celestial phenomena for whatever reason. That Venus is the money planet. Where are we at? Planetary angles. So planetary angles, they're going to be represented by these vertical lines on the chart. Let me just get rid of all that, make it a little bit more smoother to see. And he said that it's Mercury. I want Venus. All right, here's the other thing to point out, that this is not just a whole bunch of craziness. Is that Optima is a professional suite of software. It's thousands of dollars. If financial astrology was just something for kooks and weirdos, there's no way that this would be like a part of theirs. I mean, it's a separate suite, like the Gann suite and the Astro suite. These are all, it's legit. It's not a scam. Financial astrology is a thing. I gotta stop calling it financial astrology because it's so much of a turnoff. I'm just gonna call it financial astronomy. So this vertical line here is Venus. And oops, I have to change the degrees. Here's 36. So 36 degrees. And the first one that I ever saw was right here. I was like, okay, well, that happened near a pretty important swing low. Does it show up at others? Well, that happened right on at a swing high. Go back in time. This was kind of near a bottom, but not really a swing at all. Not really. Swing high. So this is just the degrees of 36. And then for whatever reason, also, he had mentioned 72 degrees of Venus in another market. And this is the one that kind of made me go, what the hell? And I repeated it. So every 72 degrees. So we go from 72 to 144 to 216 to 288 to 360. Okay. So it just repeats that. And because Venus goes retrograde, which means that sometimes it looks like it's not moving in the sky, even though I have no idea where the hell you would look to find Venus. I have no idea. I didn't even know you could see it. Maybe you can. Maybe I already knew you can. I don't know what it looks like. I just know that in financial astronomy, it's an important planet. And for Bitcoin, it is a crazily stupid planet that has a really, really high probability. It has an extremely high probability of showing up near important swing highs or lows. And if we look at just the most recent price action, this is every 72 degrees, the vertical lines. Okay, these thin vertical lines. Let me, if you can see them. Yeah, you can see them. They show up at a pretty good amount of important swing high low areas. And the last time we had a series of the, because we're in a Venus retrograde cycle right now. The last time we had the 216 degree angle like this was way back at the very beginning of Bitcoin's chart. And we know what happened there. And even on this chart, even in the most recent price action, we can see that the 216 degree angle, it shows up 3 different times here. And it looks like it's appearing at these areas that produce minor swing lows. And we're coming up on the next one here. That is, I know it says the 21st, but I don't think that's, yeah, that is. It's actually on the 22nd. All right. And so this is a cycle that I can wrap my head around and understand. The other one was the why is it going like that? It's weird. Conjunctions of the Sun and Pluto, for whatever reason, also have a high probability of showing up at important swing highs and lows at or near those. Those are the kind of the brown. Conjunctions are generally regarded as a positive angle. Why isn't it showing the oppositions? Why is it showing the oppositions like this? This makes no sense. All right. There, when looking in the past, when we've seen the retrograde cycles in Venus, Bitcoin operates kind of oddly. This is how. This is the S&P 500. This is the retrograde cycle of Venus. All right. Actually, post an idea on TradingView about this back on September 19th and again on October 2nd, mentioning that that there's a high probability of U.S. equities falling in a Venus retrograde cycle. If prices are trading near an important swing high or all-time high in U.S. equities, it has a high probability of being a down moving market during the retrograde cycle. Conversely, if it is trading near some lows for the year or at important historical swing lows, it generally finds support. So, but in a lot of the most recent Venus retrograde cycles, we've seen prices trade down in U.S. equities because they've been trading near their yearly highs, and we see them selling off. This one was mostly flat. We see a supportive one, rising one. This was near some important end of year lows. This is 2008. Venus retrograde turned into a positive one. So when we see historical performance and behavior of retrograde cycles, they're just good to pay attention to. Because for whatever reason, there seems to be a lot of activity in these. That's just astronomy. And Bitcoin, same thing. If we go back all the way to the earliest that we've got, this is 2010 through 2011. We have somewhat of a rising market. Compare that to the next cycle, which was here in 2012. Mostly rising market. Then we had the Mt. Gox, which was even the Mt. Gox time period, the Venus retrograde cycle, was a mostly rising market. Then we had 2015. This one was a down market. 2017, down to flattish. Yeah, it was technically down, but... And then we go into 2018, and is where we're at right now. So, taking all of those things into consideration, and then when we combine it with other technicals, like we could just use the basic Dow theory approach when we're looking at a market. This is definitely in its next, it's in its accumulation phase, waiting for its next expansion. This is really nothing different that we haven't been talking about for the last few months. That's all we're waiting for. So time cycle wise, we've known ever since June that the market has already, this is the other part you got to kind of wrap your head around for a second, is that in Gann's work, time cycles are they are the precursor to changes in markets. So when a particular time cycle ends or begins, then you will see a change in the trend. Now we know that time and price don't always move in equilibrium. That's why charts look like this. If time and price always moved along together, it would just be a very nice, pretty curve. Okay, we would not see any jerky behaviors like this. And that's because price likes to oscillate a lot before it catches up with time. And that's why when Gann said when you have time and price squared, that is where you see major activity. So oftentimes price is not in equilibrium with time. So even though a time cycle back in June told us that we were that we started a bull market, price has not responded to it yet. Now, what exactly does that mean? Nothing. I think it's actually like the coolest thing ever, because when price is deviating from the actual time cycle in a pattern, you get a very violent reaction to price action when it finally decides to enter into equilibrium with time. So it's like it's like thinking of two different price charts, okay, where price is trading here, but in reality, when we were back in June, in reality, time and price equilibrium is sitting at, well, what's the date today? The 22nd. And there's a couple prices that you could use. What is 71 squared? 5,041 or 109. 11,881. That's the next price level. So the squared level of time and price above the current price action is sitting at 11,881. So near the 12,000 value area. That is where price and time are currently right on that harmonic, actually. This is where price is actually trading at. For the current date and time, that's where price is currently sitting at. Above us. And so, and again, and below we saw 5,077. That's the other zone. That's right below us here. Prices could move down to that, sure. But where's the most profit to be had? Is to be on the short side of this market or on the long side of this market? Pretty much on the long side. And so the longer we spend moving away from the current square of price and time, the more violent the move is to that. I mean, it snaps back very hard and very fast. And we've seen this repeated all over the place throughout any type of instrument or any type of price chart. We just see that happen all the time. All right. And when we're looking at the current conditions here from the astronomical time cycle perspective, this is pretty bullish. The Venus retrograde cycles, if it's not trading up, it's a pretty flat to slightly down neutral market. But most important thing with Venus retrograde cycle in Bitcoin is looking at the behavior after. Okay, what happens after prices exit a retrograde cycle? Expansion. Contraction. Mt. Gox. We have an expansion. Okay? With the exception of the Mt. Gox here, which there is a cyclical reason for that. I don't think we've ever gone over that. Okay, but okay. But the behavior for Bitcoin after exiting a retrograde cycle is to have a pretty expansive move. And this says we leave it in November 16th. When did the bull move start in 2017? November 11th. Yeah, about a year after. Where really the expansive move happened back in July. This was public participation phase from November 10th through December 17th. This is the least favorite time to trade for me. I hate parabolic rises. I hate them. Because you don't know how, I mean, you can determine how high they go, but you don't know which price level it is. Because who in their right mind would have thought that? I don't know how many here were active in yes, compilation channel. Prices will go up or they will go down. That is my professional assessment of this market, that the direction is either up or down. But as far as the range, as far as the square of price and time, and here's the thing, like once because we're closer to the lower calculation of the square of price and time at 50, what was that? 5,041. Because we're there, we're above that. There's not a lot of, we're not so far away from that where we would see prices just collapse lower. We are much farther away from the level above it, which is near that 11,800. All right, it's the pull is like it's like a tug of war, and the people who are pulling on it down, they have, well, I guess tug of war is not really a good example, but it's like I guess a rubber band is probably the best description. I use the rubber band analogy all the time. Use it for the Ichimoku system, use it for VWAP, all that stuff. But think of it like two rubber bands are connected to price here. One rubber band is connected at 5,042 to price, and then the other rubber band is connected at 11,800. Okay, when there's not a lot of tension on that rubber band at the present value to 5,045, 48, whatever that is. But the time and price square of 11,800, it is quite a distance away. It's like a full rotation around the square of 9 away from that. So this is the move that is the most dangerous to trade against. It is dangerous to go short at these kind of levels. Additionally, as we move forward in time and we see price continuing to move along the square of 9 here and rotate, the lower calculation of a square of price and time increases. So we were at 71. If we look to the next important angle is at 225. So on November 7th, we're looking at 73. It's 5,329. And so forth. And if we were just to stay moving flat along this curve until we got to January 1st, or looking at December, end of December, beginning of January, looking at 78. 6,084, that's the value area. And so, really, when you're looking at price ranges, we're already trading within the value area of the lower band here. I mean, if we were to separate them, we're trading well within that range already. So there's much more of a bias moving higher faster than there is to drive lower. All right. That's what I'm looking forward to, actually. And there's a whole lot of, and so then the question is okay, well, how do you know what moves the price then? And this is the part that makes Gann analysis so funky. And it kind of changes your approach to a lot of stuff involved in the market, is that you really view, as a Gann-analyst, you really view the market as non-random, and that humans have no control over the pattern that controls the market. Like, there's a set pattern in nature for everything, and man cannot change the direction of a market. We just respond to it, and we find excuses for why something moves. Like, news is a reaction to time, and humans respond to time. Like, time, that's Gann's big thing, is that time and price are one and the same, but that time is the ultimate master. It is the superior factor in the market, and that time rules all trend changes and patterns. So, and Gann talked about this, and it's his law of vibration that has this pattern that is in every single market. Where is it at? Here it is. This is the pattern that is active in all markets. You know what? Let me get to a cleaner chart somewhere. A little bigger. So this right here is the pattern that is played out in every market, and on every time frame. And when you can find this, you can trade it pretty well. And the point here is to look at this pattern and not think of price action following it exactly. What you're looking for are just these peaks and these troughs. Okay, you're looking for, because the high right here can be higher than the high over here, just as long as you see that there was a drive up followed by there was a peak and then a trough, and this is what you look for in a market. Once you can find it in your market, it's pretty crazy what you can do with it. Might even be a little bit of one right there. But this is the law of vibration that Gann talked about, and this was plotted out by Tony Plummer in his book, The Law of Vibration: The Revelations of W.D Gann. Great book, really wordy, kind of crazy. Some of it is kind of out there, but it is a fantastic look in the book. And in Constance Brown's work, something that's pretty fascinating is it's in the latter part of these chapters. Harmonic unity within market, price, and time. I think this is it. Yeah, because she's talking about how you measure ratios in the market, and there's arithmetic, geometric, and harmonic proportions. Talk about proportions. And measuring those ranges in the market. This is it's crazy. Constance Brown actually shows you, and she's not one to hide information, and because there's a lot of people who know Gann very well who don't want to divulge how to use it, which is really frustrating. But Constance Brown, she's a technical analyst, nerd, and educator first, and that's what I think. I could be totally wrong. I've never met her, and I don't know her beyond just watching some of her videos and some seminars and all that jazz. But she's very much interested in disseminating what she's learned. And if you want to know how to forecast a price, short-term or long-term, based on Fibonacci ratios, this is the book that will teach you how to do that. And it is crazy accurate, man. It is stupidly, crazily accurate. I get chills just thinking about it because I use it. But she talks about, okay, here's frequencies, harmonic frequencies. I mean, again, this isn't you're not going to find this on Baby Pips, babypips.com. You're not going to find this on investing.com. This is master's level technical analysis shit. This is good stuff. She's talking about the Ulam spiral. If you're familiar with this in math class, looks very similar to the Gann wheel. And what she explains, this is actually pretty crazy. He took the let's see, it looks very similar to the square of 9 spiral pattern. The whole number's in a spiral on figure 8.7, which is right here. The Ulam spiral is not original, but what he did next was he began to circle just the prime numbers on the upper portion of the figure, okay? And then on the lower portion of the figure, all numbers have been removed except the prime numbers. And there's a paragraph in here. I know I highlighted it somewhere. But then this is the primes that show up. Or actually, this is all those numbers, but then here's the primes when you have them left, okay? And he found this. This is a Fibonacci spiral. This is a sunflower, okay? And I don't know if everybody knows this, but the Fibonacci spiral is everywhere. The ratios of Fibonacci's levels are just everywhere. And actually, she goes through some of these in her book, if I can find them here. Here's a frog. Frog skeleton is separated. Your elbow to your fingers are all separated by perfectly segmented Fibonacci ratios. This is you've probably seen this conch shell here. It's also like your eardrum. What was my... And where did I highlight that thing she wrote? Because she wrote in here that the further study of Fibonacci cycles and harmonics in price in the market really adjusts your view of the world in general. And I'm not trying to go way out there, but it's... And see, here she's even talking about planets. Mean distance per NASA. This is just the knowledge. This is just a fantastic book. She goes through a whole bunch of. It's just if you're a big nerd, you're gonna love it. Oh yeah, here's the knowledge shell in a pentagram. I'm getting a little bit off base here. Where is that comment she wrote? There she was talking about Gann. Oh, damn. Bear with me while I try to... Oh, here it is. She wrote, if you're looking for more behind these methods, the final chapters will give you insight into how the confluent zones relate to each other. Okay, I'll go over confluent zones here in a second. Oh, thank you, Santosh. You'll discover that the proportions between zones are harmonic. That's going back to arithmetic ratios, geometric ratios, and harmonic ratios. This opens up a different kind of chart analysis, and it's interesting how life comes full circle. The discovery of harmonic relationships between confluent zones brings us back to the Pythagorean doctrine that all things are connected by harmonic proportions. I believe this to be true now. For the few brave enough to read on, we are ready for those final discussions. For those who need more time to digest the methods described, I'm including myself in that, because there was, this is a tough book. Because you have to put into practice the things that she's discussing and try to use them yourself. And then as you're practicing the use of these, the way that she does these Fibonacci levels, it's kind of mind-blowing. And it's really discerning, because you realize we have little control. If you didn't know that already, you really feel it when you use this stuff. But, okay, enough on that. How does she use... I should do a separate thing on this, but I'll go over some of it real quick. I need my... Here we are. Okay, so let me get up Bitcoin here. Okay, Bitcoin. Let's go to a daily chart. And I don't need all that. So one of the things that Constance Brown wrote about, the first one is that Fibonacci retracements, we've been doing them wrong all along. So if I go to a Fibonacci retracement, and just a second, I want to make sure that I put this on default. Apply defaults. Okay. So if you're in TradingView, and again, when you're doing retracements, if you want to get a retracement from a prior move, you start, like if you want to get the retracement of an up move, you start with the low up to the high, or if you want to get the retracement of a down move, you go from the high to the low. So if I want to get a retracement of this move here, I'm going to start at this low and go up to this high. She says, and probably everybody does this, but make sure the lines go across the entire screen. And, you look at it, and big thing in Fibonacci and big thing in Gann analysis is that 50% retracement. That, when things come down to the 50% level, that's typically where prices stop and reverse. I don't know if this is new to some folks or not, but this is something you'll see all the time, that the 50% level is a common area where prices halt and reverse. Now, thing that she points out is that you get rid of all the others except for the 382 and the 618 and the 50%. Okay, you don't use, well, you can keep this 1618 on there, but you really don't need the others. And those are the only ones you have on there. Okay, but here's the other thing is that this is the wrong way, according to her, is the 618 should be on top. So if you're going, all you have to really do is just hit reverse and it swaps the ratios and really turns it into an extension of sorts. And that's how you want to do your retracements, okay? You probably won't see this anywhere else. I guarantee you nobody else is showing this to you, okay? Guarantee it. Nobody else is showing you how to do Fibonacci retracements the reverse way. This is the way that if Constance Brown says that this is the way to do it, damn it, it is the way to do it. Okay, so this is that retracement, and we look at the 618 and the 50% level as those strong areas of reversals. All right, now what she would do is she would actually we would look at other levels too, because confluence zones that she talked about were areas of congestion of these Fibonacci levels where they would overlap on various time frames. So gosh, maybe Bitcoin, because it just has a one directional move, maybe it's not going to be the best one to use, but we'll see. So here's this big drive here. What if we were to consider this, you know, that was the swing high. If we were to drop from here up to there, you know, what do we get? We get it's a 50% move. And this is what Connie Brown did, is you just take a rectangle tool and we would have more confluence zones, but you would really draw a rectangle over that from the starting point and then just copy it and put it on top of one another, because then you kind of get this is where you would project price to go. I am really simplifying things here. I'm slaughtering it. But and somebody might ask, why don't you use the first swing? And this is the other thing that'll blow your mind, because Gann talked about this, and Constance Brown did this too. If you ever see her charts, she never really uses the extreme lower high on a swing. She usually uses the second one. And that's actually really, really relevant to the current price action in Bitcoin. And so we would use these price projections boxes to look ahead in the future, and if we were to just continue that kind of activity, that's not what I wanted to do, but damn it, stop it. Take the box here and just slide it over there. Why is that? Okay, we're looking at, and then you would actually do a Fibonacci of that box here. And we can see that the actual original extension, I mean, it's really not a surprise if you practice a lot of Fibonacci stuff, but the original 1618 expansion here, which is also the, is also the 618 of this move. We see a strong confluence zone here, especially when you have the 618 and then the inverse, the 1618, or reverse that. There you have strong evidence of a very important future support and resistance level right there. And what she would do is she would just put a horizontal line there and then get rid of all the fibs, so you don't have all this stuff all over your screen. I'm really simplifying things here. I mean, tomorrow I'll go over this, because I know people like Fibonacci ratios. They may not like Gann or think it's way too much to do, but people can wrap their heads around Fibonacci ratios. So we'll keep that box there. We'll get rid of this one. So we've got these levels, and that current line that we drew here is a pretty, it's kind of been our support level. That's the 618 ratio from a couple major swings. But what we're really looking for now is we've got this big move that we had back last year. And we want to just really get into getting a lot of these swings and finding the major confluence zones. And then here's the interesting one, is that when we're doing a retracement down from this extreme high, Gann was really, and she even cites Gann saying this, that Gann said that the second swing high or the second swing low from a move is the more important one, all right? Because if we take this swing high and start that as our retracement, it's not nearly as important as if we were to base it off of this high here. Because where does this triple top happen? Happens off of the second high, not the first high. Happens off of that second high. I think that's pretty damn cool. I don't know about you. I think that's pretty neat. So there's our first major bear retracement move. Here's probably our probably this one. Here's our first. We would use the extreme here. We can go to the extreme there, or I think you can go there too. But you can go to extreme there. And I mean, if we wanted to get even, we'll leave them there. So we have a couple strong confluence levels that we're looking at, and putting horizontal lines in those areas. Just those two are going to be very important for in the future, because we've got these are Fibonacci confluence zones, and if we have two of them like right here that we know about, we can box them out. Copy them. Going really just kind of a rough zone here. Well, I'll be damned. They line up pretty nicely, don't they? I don't know if anybody else finds this interesting. I always find this stuff pretty crazy. And the point is that really, when we're looking at these two, we're looking at two long-term swings, an upswing and a downswing, two major moves, and we see that there's a confluence zone here of the 50% retracements. Big friggin' deal. This is a big one. This is probably the most important one to look out for. It's right here at 11,500, 11,400. But these boxes give us a range to trade in, and they give us an idea of where prices could move higher or lower. And we know that this would have been useful in the past too. I mean, we could have used these in the past. We could use them here in the future as well, because they give us the levels that things are more than likely going to be trading in. And you would put the Fibonacci ratios in them as well. And if we bring this, down to shorter time frames, like the 1 hour, where did I draw that? Oh, right here. We can see that these levels are acting as very, very awesome natural resistance zones, and the extremes are acting as reversal zones. They're trading right up against them. I mean, it's pretty cool stuff. And again, I'm really oversimplifying this and really not doing it the proper justice it deserves. But again, this is cool stuff. This is cool, crazy stuff. And I wish I wouldn't have closed the book out, but anyways, real quick, looking at the current price action, just doing the actual look at the market. I mean, on the hourly here, we see a little bit of selling pressure going on. We just closed the 2 o'clock hour. I mean, folks, we're still in a pretty tight consolidated range ever since the 15th. Ever since we had that big rise last week, we just haven't moved much. We've traded between, what is that, 6,500 and 63. It's not even a $200 range we've been trading in. It's been pretty tight range, and there's a clear bullish divergence here between on the hourly at least, between the RSI and the composite index. This is showing a bullish reversal on the hourly. On the 4 hour, what do we have? Oops. Shoot. Okay, we had that. Sorry, I was responding to somebody. We have I'll get rid of that. We have pretty flat to higher lows on the 4 hour, but lower lows on the composite index. Not by much. It's actually pretty flat, but I guess technically we do have lower lows in price, higher lows in price, and lower lows in the oscillator. That's a sign of hidden bullish divergence. On the daily, pretty equal weight. Everything's sitting in a pretty flat zone here. Not a lot of movement or pressure on the weekly. The weekly, yeah, same thing. 3-day, same thing. Yeah, just not a lot of anything going on here. So, the big movers, the big ones we talked about. Of course, basic attention token. We'll get into more about these tomorrow, but basic attention token, kind of miffed. I took profit last night on this at like, what is that, 4,035 or something, and then woke up to it trading all the way up here, but I mean, wasn't going to chase this thing. Would like to see, I think we have a bit of a deeper pullback showing up here on basic attention token, but maybe not. But looking for a pullback to get back in there. Nano catching a little bit higher. A lot of these things traded up pretty well. ZRX is maybe going to see a breakout here. CEC is trading up quite a bit. Yeah, we'll see how these altcoins do, and see if any of the majors like Ethereum and Bitcoin, if they end up having a big move or not. Otherwise, probably see a little dip again as we saw back on the 10th. So anyways, hope you guys had a good weekend, and I hope it was a fun weekend. Please take care of yourselves and watch these markets, because man, it's not going to take much to pump these things out of where they're sitting. Yeah, it's going to be a big move when it finally happens. But otherwise, this is a hurry up and wait scenario. That's what we're doing. So, Forex Lens, folks, I'll see you tomorrow morning at 6:30. The rest of you, I'll see you again tomorrow afternoon at 1 o'clock. Same bat time, same bat place. Have a great rest of your Monday, and we'll see you tomorrow. Bye-bye.